Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and I hope that you had a great short holiday trading week. There was a ton of volatility out there, even though I was encouraging people to just get away from the markets last week. I'm sure some of you were out there trading, and I hope it was prosperous for you. Now, we haven't talked about earnings really because we're at the tail end of earnings season and nothing exciting going on. This week, we start to kick things off with earnings season. I know you're looking at that screen going, Merlin, but there's only 70 companies. Who cares? Well, hold on. Let's start things off with a little bit of market lubrication on Monday. Yes, we got WD-40 reporting on Monday. Not that that's a major name, but I thought, hey, throw a little humor into the presentation and start it off for your trading week. Tuesday and Wednesday, you've got Goose eggs. Thursday, though, it starts to get better. You got Delta Airlines, PepsiCo, Agra Brands, and Fastenal. And then on Friday, oh yes, Friday, we start off the official earnings season, kicking it off with major financial firms, JP Morgan, Citigroup, Wells Fargo, BlackRock, State Street, and then United Health Group in there. Now, this is a pretty exciting kickoff because we've been dealing with the volatility due to inflation, GDP, unemployment data, and just Jerome Powell and the Federal Reserve and whatever the market throws at us. Now we have an area we can focus our attention on and at least plan and know that these companies are coming out with earnings, which may create a lot of volatility in the markets. And I think of real interest here is a lot of traders, like myself, are wondering, when are these rate increases that have happened in the past, right? We've risen 5% in the Fed funds futures over the past year. When is that really going to start to hit the earnings for companies? And we may start to see that this earnings season. So a lot of people anxious for that. What we do know is it's going to create a lot more volatility, which I know is music to the ears of some of you short-term traders out there. All right, let's go into the next step here, which is going to be central banks. Last week we talked about a couple different central banks, and I think I made a mistake, which I will correct here shortly. We start things off on Tuesday with the Reserve Bank of New Zealand. They're expected to keep rates right where they're at 5.5%. Now that's going to happen at 10 p.m. Eastern time for you U.S. traders, so not going to have the most impact on the market, but I know some of you trade the New Zealand dollar, and therefore that will be important for you to pay attention to at that time. Now, last week, I think I had on the calendar that we had the Bank of Canada reporting, and I may have made a mistake. It was on my economic calendar, but apparently it's this week, not last week. So my apologies if I did make that mistake. 4.75% is where the Bank of Canada is currently at. They are expected to raise 25 basis points. That's going to happen Wednesday at 10 a.m. Eastern time. And the reason I find this one interesting is because you have the U.S. markets pausing, and there tends to be kind of this keep up with the Joneses type of action from Canada. So do we get that 25 basis point raise? That's the expectation right now, but boy, you got to scratch your head a little bit and think, might they pause? Might they pause just a little bit? Because we're both right around the same number. So we'll see what happens with the Bank of Canada on Wednesday at 10 a.m. Eastern time. Now the final piece. Again, we talk so much about inflation. The picture is starting to shape up, and in my opinion, it looks really interesting right now. So let's start things off with two announcements happening this week. That's going to be the consumer price index numbers and the producer price index. The first of which, as I mentioned, the consumer price index coming out Wednesday at 8:30 a.m. Eastern time. For now, I want you to focus on the right-hand side of that chart. You can see we had that big surge from 2021 all the way into mid-2022, but then a sharp decline. And maybe that's the rate increases by the Fed having an impact. But what's noteworthy for me is, if you look at that little red box I'm going to put on your screen here, those bars looks similar to what we had back in 2016, 17, and 18 when inflation was right where the Federal Reserve wanted it. So it feels like the most recent inflation data for the U.S., according to CPI, is in line with historical numbers. Now, of course, we need more data points, right? We need 12 to make it a full year here because these are monthly reports. But if we can get a few more that are very low, then there may be some room for the Fed to stop raising rates and maybe keep the foot on the gas pedal if inflation is actually under control. But this is the price that consumers are paying for the basket of goods and services, and notably, they are all pretty much above that zero line, meaning that prices are still going up, albeit not at such an alarming rate as we saw back in 2021. Now, when you look at the producer price index, a different picture is painted. On Thursday at 8:30 a.m. Eastern time, the PPI numbers come out, so just the day after. But notice in the red box, I'm going to compare both of these right now. You notice that the consumers have been consistently paying higher prices, except that one little blip back in January of 2023, everything has been above that zero line. But when we look at the producer price index, that's interesting because this is what it costs manufacturers to make these goods and services. And you notice out of the last 12 bars there, 6 of those have been below zero, which means that prices have been dropping significantly for producers, yet that's not quite passing on to consumers. Now, what does this mean? Well, if we look at simple business economics, if the people making the goods and services are paying less for their products that they're selling you, and they're selling it to you at the same price, that means better profit margins for those businesses. And lo and behold, we have earnings season rolling out, so maybe we might see some of that reflected in company earnings. PPI numbers have been declining aggressively. CPI has been declining, but not as aggressively. Therefore, we're seeing a disparity between those two numbers, and that middle ground there, right? That space, that spread, if you will probably go into the producer's pockets. So that should be an interesting thing to look forward to for our earnings season. Now, of course, I just went through three things very quickly. You've got the kickoff to earnings season, you have a couple central banks reporting, and you also have inflationary data, which should make for a very volatile week. And that, my friends, is your Monday Morning Must-Knows. We'll see you next week.